Hey, I'm Dan Breezy, real estate investor, managing over $430 million in client assets with my partner. Today, I am reacting to boomers struggling to sell their homes.
America's demographics have just flipped. Millennials are broke. Gen Z doesn't want the suburbs, and the foreign buyers are disappearing. Now, tens of thousands of boomers are waking up to homes that they can't sell. They're too large and are built for a population that simply just doesn't exist anymore. So let's jump into what has been going on with this boomer panic, especially here in Florida. The reality is that the boomers are freaking out and they can't let their real estate values go down because that is where the majority of their wealth is trapped. Apparently, from the statistics that I have seen, 3.2% of boomers are considered net worth millionaires. The majority of boomers have their net worth trapped in their house as a form of equity. This chart is really interesting. It comes from the Federal Reserve Board and Goldman Sachs Global Investment Research, and it basically shows that baby boomers, along with the silent generation, control about 70% of household equity in full mutual fund ownership by.
Yeah, the talk here of baby boomers being trapped with equity in their homes. Yeah, it's a challenge because these equity values, these home values are so high that the next group of buyers can't afford them. And so your net worth and equity stuck in your home is not really any value until you sell. So keep that in mind, the difference between equity and net worth and cash flow. I'm far less focused on what my net worth is based on the assets I hold and the equity in them. And I'm far more focused on how much cash flow am I seeing every single month that I can use every single month. Because if a home's got equity trapped in it and you can't sell it, is the equity really there?
For real estate, which is absolutely crazy. And look at Gen X and the millennials. There's a lot of money that's going to be transferring to the next generation over the next 10 to 15 years. And it's going to make a massive change for housing moving forward in terms of the size of housing. And then how will first-time home buyers compete against the baby boomers who are downsizing? The boomers hold the most real estate assets out of any generation. This chart.
Yeah, when he's talking about first-time home buyers, I see it becoming more and more challenging purely due to inflation. The more they print our currency, the more the dollar is printed, the more expensive real things become. And so you may have looked back over the last 5 or 10 years and you see the living standard, the lifestyle is harder to maintain is purely due to inflation, printing the currency, printing the dollar. And so as that continues to happen, the big challenge is how do we allow or help the first time home buyers acquire a home when you need to have a down payment or a mortgage payment that's very expensive compared to renting. We're turning more towards a renter's nation. And I know there's a lot of different programs they're discussing right now of how to help and allow first time home buyers to actually be able to make a home purchase. I don't know how they're going to get it done, and I see it being more and more of a challenge in the months and years to come.
It comes from realtor.com. They put out a great report with tons of data in it. But as you can see, the silent and earlier generations are at 4.38 trillion. The baby boomer generation is at 19.51 trillion. Gen X is doing okay at 14.14, and the millennials are at 9.9. Obviously, this has to do with the longevity and the time frame that the house was purchased. But 38% of homeowners in Florida are boomers or older, and that wealth will likely transfer to the next generation within the next decade. According to studies, is about 40 to 80% of boomers or older will pass away and transition out of their house in the next decade from here on out.
When I hear 38 to 40% of boomers in Florida own these homes and it's going to transfer to the next generation, my immediate thought is the next generation equipped to handle that kind of wealth that's going to get transferred to them? And will it just be an onslaught of selling? Because a lot of these younger generations maybe don't want the home, they just want the cash. So the question really would come down to is it better to sell sooner now, in this next potentially interest rate compression period and get out versus be an owner in Florida looking to potentially exit later on as you have many baby boomers looking to bring their house to the market? Hard to say. Will a lot of it be transferred and just given to the next generation? Then the question is are they just going to choose to sell anyways?
If you want to see how I'm cutting my tax bill by 15 to 20% using real estate, check out the free blueprint I made that breaks down the exact structure I'm using and how you can do it too. And I've got the link in the description below.
So when we look at where the retirees hold the most of that real estate wealth, pretty interesting. Florida comes up as one of the top spots with 5 of the top 10 metros holding the most real estate wealth. They are in Florida, and you can see this is South Florida, and most of these are on the water. But the reality is that a lot of these retirees also don't have that much of savings. As I mentioned earlier, 3.2% of them are millionaires. So it's these extraordinary houses that are worth, 20, 30, 40 million dollars that are owned in cash, where a lot of people own their wealth. But that is not the majority of boomers. The majority of boomers rely upon that.
See, when I hear that, you got a home that has 20, 30, 40 million of cash. That dead equity sitting in that home could be creating so much income every month, put in strategic, high valued, profitable locations that are managed well. I mean, just take 20 million and take it at a 5% cash on cash return. 5% of $1 million is 50K a year. So you take 5% of 20 million, do the math. You're talking about a serious stream of income and multiple streams of income that you can do stuff with right here, right now. Equity at that level, not paying streams of income, feels like a huge missed opportunity to me.
Equity in their house to fund, their daily lives. They get home equity lines of credit and things like that. So what happens when real estate asset prices come down, or real estate becomes so unaffordable when they want to sell or downsize? They can't, because there's no buyers at that price point that can afford it. The next generation simply cannot afford it. The reality is that the boomer transfer of wealth will be absolutely insane. So baby boomers and older generations are responsible for 81% of all upcoming wealth transfers, 100 trillion out of a projected 124 trillion. Although millennials will accumulate the largest share of that, Gen X is expected to inherit more in the near term, about 14 trillion over the next 10 years compared to the millennials. When we look deeper into this, the timing highlights by 2045, the majority of that will be passed down, some of that going to charity.
Gosh, so yeah, when you hear that type of equity is stuck in these homes, let's just say there's 20 million stuck in some of these homes in Florida, and you take a conservative 5% cash on cash return. At $20 million, a 5% cash on cash return in a conservative triple net lease play or a very high quality apartment location is $1 million a year of cash flow. That's $83,000 a month, and that's quite conservative. So if you can take your 20 mil and you can start receiving $1 million a year while keeping that 20 million growing, seems like a much safer, wiser play for me than to sit on the equity and live in a really, really beautiful home. And at the end of the day, could you possibly buy a home when you're making $83,000 a month? Heck, just make sure you only spend 40 of it and keep the other 40 for future investments. So now you're living on 40, 50,000 a month. Pretty healthy to be able to live a pretty beautiful lifestyle while still stacking money away for future investments. That's powerful.
In the next generation, about 18.8 trillion in real estate assets alone in the next decade will transfer hands. This is a massive real estate transfer. The question will be, who is going to purchase those homes? Will the people who inherit the homes keep them? Probably not. They often don't live in the same area or the same state and will need to be sold or even renovated. And that's a huge opportunity for flippers if they can flip and find the next target market. This is a Wall Street Journal article that came out in 2019. It says, okay, boomer, who's going to buy your 21 million homes? That's the estimate of homes that they can see coming on the market moving forward. And sellers are freaking out. I can tell you right now, there's boomers who are looking to sell in my neighborhood that I live in, and they can't find buyers for them. The buyers for them are only people who can relocate from California or New York and are used to those type of prices and are totally okay purchasing mostly in cash or at least 50% of their down payment cash and have a low payment. That is unfortunately not the majority of people. The majority of people who live here locally are completely priced out of the market. And that's a huge problem. So if more and more boomers pass away and their houses are vacant, who are they going to sell to if it's not somebody relocating here? There's just not going to be enough demand to fill this massive amount of supply that'll be coming on.
You know, he's got a valid point. You bring your deal out or your home out to the market for 20 million and no one buys it. Is that the value? Is that what it's worth? I mean, the market is going to dictate and decide what the value is. If I'm a boomer right now, I'm doing some serious research and serious thinking about what is likely to come in the next 5 or 10 years if I'm looking at exiting a massive exit like that. Because he's right. I mean, how many people are able to buy a 20 or $30 million home? Extremely small percentage of folks. And will that buyer pool still be there in 5, 7, 10, 15 years as a lot of these baby boomers retire and transfer and pass away, and the generation coming behind them may not have that type of wealth
in the next decade or so? So we call this the silver tsunami. Even Berkshire Hathaway is commenting on this about the demographics. So if you're in real estate and you're not talking about demographics, it's one of the most important things that you'll see play out in the next 10 to 15 years. Between 13.1 and 14.6 million boomers will abandon home ownership from 2026 to 2036, raising housing industry fears that such a large inventory of homes could lead to price collapses. This is definitely true in Florida specifically. And the article says, as baby boomers age, they're expected to leave behind homes that many prospective buyers won't be able to afford. This could shake the already tenuous housing market as demand among older and younger home buyers shift towards smaller, affordable homes.
Yeah, this data is phenomenal. If I'm a baby boomer and I'm sitting on a home like this, I'm seriously assessing what's the need and what's the reason for keeping a home with 10, 15, 20, $30 million of equity? And do I have an exit strategy that doesn't rely on that home? Now, if you're sitting in a place where you've got other investments and you're totally in a safe spot, but when he said here, the majority of baby boomers' net worth and wealth is stuck in their homes, that's a risky play. That's not value until you sell. That's not worth anything until you get the sale. And based off of that many baby boomers coming to the market all at the same time could have a massive tsunami effect on what these values actually are worth.
Absolutely seeing this. Homes that are, 1,200 to 2,000 square feet are getting gobbled up, but the ones that are 3,000 plus square feet, especially since most home buyers aren't even, a lot of people we talk to today aren't having this family household formation. They're not having kids and they don't need the larger square footage. First time home buyers won't want to buy these bigger, outdated houses from the baby boomers, nor do they have the money to be able to do so. So as affordability deteriorates, the listings will sit idle. We're already seeing this in Florida. Of course, we're having a downshift from the period of time that prices just went up 52% in the last 5 years, and the inventory will lead to collapse. But they will compete. This is a really important part to understand. Baby boomers will compete and win against other first-time home buyers in the marketplace as they downsize, because they will have the larger down payment and they'll be more okay paying more of their money to get the house that they want because they're nearing the end of their life. So
gosh, that even puts more pressure on first-time home buyers, because you got these baby boomers to the tune of 13 million that are going to be exiting these big homes. Well, where are they going to go? They're probably not going to go to an apartment and rent. They're very likely going to want some sort of assisted living facility. They're wealthier, and so they're going to buy smaller homes and potentially put more pressure on those first-time home buyers. Again, putting more pressure on people being renters for longer.
Experts anticipate that when baby boomers finally decide to relocate from retirement, sell their houses en masse, it will worsen the housing affordability crisis for younger generations, because this will push up the prices of those first-time home buyer houses, those smaller units. As the boomers sell their houses and purchase smaller homes with cash, they're inadvertently making it harder for first-time home buyers and lower income buyers to compete. Millennials and Gen Z will need to compete for homes with senior baby boomers, Gen Xers approaching retirement, and even the institutional investors like BlackRock, which owns upwards of 60,000 residential homes in its portfolio. This is exactly why you see American Homes for Rent, Progress Homes, First Key. These companies went out there and purchased properties in that 1,200 to 2,000 square foot price range. They track these demographic changes over a period of time. They know what's coming, and they're way ahead of you, 10 steps ahead of where you are today. So look, this is a phenomenon we are seeing right now play out in Florida. Home sellers are so fed up with cutting their list prices, because that's the majority of their wealth in their real estate. They're just yanking their homes off of the market altogether, and they're just saying, I'm just gonna stay here. Maybe I'll just stay here. I won't move close to family. If I can't get the equity out of the house, they won't be able to buy a new house, and so they.
Yeah, I mean, that headline right there, where home sellers are just yanking their property off the market because they're tired of cutting the value, makes sense to me, because if someone's got their net worth in their home and they're relying on this number, they've had this number in their head for many years, now they bring it to market and they're just seeing that dwindle. comes to the point of like, where's the rubber meet the road? Is it worth it for me to sell this thing and go buy now at a much higher rate? Is it better to just sit here and hold and wait because there's so much talk of interest rates coming down in the future? Will Trump get that done? Will the buying market come back? Will they turn on the printing presses again and heat the economy back up? You know, those are variables that you've got to be taking into consideration of, do you sell right now or do you hold and hope for better times in the future?
Just stay put because they're on often pensions or fixed income or living off of their 401k, some or some combination of the two or three. And they're just staying, they're like, I can't change things right now. And they're praying that the market will get better. But every indication in the market is shooting up red flares saying nothing's really going to get better in the next 12 to 24 months. So they're just sitting still and they're living in an area where maybe they don't want to live because of this issue. So buyers aren't stubborn. They're actually just priced out. So the American housing market is in a deep freeze. Even lower prices aren't going to convince stubborn buyers. We're seeing this left and right. Actually, we're coaching our real estate agents, you know, if the seller's not truly motivated, don't even bother taking the listing. You need to understand why they're actually selling, because this is happening left and right. They're pulling their property off of the market. They're dropping their price to the lowest comp in the area, and it's still not getting any traction. And then they're dropping it below all the actives in the area, and they're still not getting any traction. The reality is you have to cut your price, the price of your home, to such a low level that it makes it feel like it's an insanely good.
It's so interesting to hear the data that people are having such a hard time selling their homes right now. Because think back to 2020, 2021, any home that hit the market, it was multiple offers within the first 24 to 48 hours. It was over asking price. It was just this frenzy of purchasing. And the Federal Reserve did a fantastic job of slowing that down and getting us to a place now where people can't sell their homes. So if you're looking at inflation appears to be under control currently. And I think the Fed has done a great job of getting that done. The question I have, which will be interesting to see how this plays out in the months and years to come, is at what point is it put us into a gridlock? At what point do they have to lower rates? At what point does it cause damage? At what point do we see job losses starting to spike? That's the question I think everyone's watching for.
Deal for you to be able to sell your house today, or it has to have a unique factor, like there's a lake in the back, the pool is beautiful, the lot is amazing, it's a highly desired neighborhood. If it is not perfect mint condition, you better believe buyers are going to negotiate like crazy with you, because now they have so many options that they did not have before. And I wouldn't say that the buyers are stubborn. They're just priced out and fed up with the situation. And they're older, by the way. The buyers who are buying right now are much older than in the past, and their first-time home buyers a lot older. So median age of the home buyer right now is above 55 years old, which is crazy. It used to be around 30. And the first-time home buyer.
He just said median age of first-time home buyers is 55. Did I hear that right? That's a stat I had not heard. But if that's the case, how many more people are forced into renting right now? I'm going to go back and listen to that one more time because I just want to make sure I heard that correct. That's if that's true.
Even bother taking the listing. You need to understand why they're actually selling, because this is happening left and right. They're pulling their property off of the market. They're dropping their price to the lowest comp in the area, and it's still not getting any traction. And then they're dropping it below all the actives in the area, and they're still not getting any traction. The reality is you have to cut your price, the price of your home, to such a low level that it makes it feel like it's an insanely good deal for you to be able to sell your house today. Or it has to have a unique factor, like there's a lake in the back, the pool is beautiful, the lot is amazing, it's a highly desired neighborhood. If it is not perfect mint condition, you better believe buyers are going to negotiate like crazy with you, because now they have so many options that they did not have before. And I wouldn't say that the buyers are stubborn. They're just priced out and fed up with the situation. And they're older, by the way. The buyers who are buying right now are much older than in the past, and their first-time home buyers a lot older. So median age of the home buyer right now is above 55 years old, which is crazy. It used to be around 30. And the first-time home buyer age is 38 years old, up from 30. So first-time home buyers are waiting long.
Okay, first-time home buyer age is up to 38 years old. That tells you that people are renters for longer. That tells you that inflation is pricing people out of being able to purchase homes. So I think this is going to continue to push into later and later years to be first-time home buyers as we go later and later into this money cycle here in the US of them creating currency, because the currency creation inflates real assets. And if interest rates have to be brought up like they had in the past and they may in the future, that home payment becomes significantly more than it costs to rent. And that's why you're seeing first-time home buyers be 38 years old before they're able to purchase their first home.
So first-time home buyers are waiting longer to buy because they can't afford the prices with today's mortgage rate.
First-time home buyers are now 38 years old, up from 30 years old. That is such a catastrophic change, you guys. It's unbelievable. That just tells you people are renters for longer, not due to want, but due to being forced out of the market. If you look at what it costs for an average mortgage payment versus average rent, it is very different, and it is keeping people in a place of having to rent, of necessity.
Any home buyer who's buying right now, it's basically near a boomer. Boomers are 61 years old or plus. Basically people right on the cusp there are the ones who are buying. Maybe they're selling a house and then buying another one. And we see that a lot of downsizing happening, which again is pushing out those first-time home buyers.
The median age of a home buyer right now is 55. It used to be 30 as well. So it used to be 30 years old is the median age of a home buyer. And first-time home buyers used to be 30 years old. Now it's 38. It's telling you that the shift of owning a home is becoming far more expensive and far more difficult, which is forcing people to rent for longer.
It's like either a home buyer that's 38 years old, loaded up with debt and can barely afford, to rub two nickels together to get their deal across the finish line, or it's somebody who's got full cash offers and they have a house contingency because they have to sell their larger house to move into one that they're downsizing into. So we're seeing this change. It's also pushing, people back from household formation from having kids. When they don't buy their first house, they wait longer to have their kids as well. The reality is that it's an affordability crisis. 52 million people cannot afford a house over $200,000. So if you're a seller listening to this, you need to get real. Like, there's less buyers for your price point. A lot of sellers I talk to who are in the $500,000 to $700,000 price point, they are just not aware of this information. They don't understand that it's so unaffordable to people at today's mortgage rate. And one way to talk to a seller and let them know is like, this is what the mortgage payment is on your house today. Who do you think is actually going to be able to purchase this and pay that type of payment? It's certainly not going to be, this bottom, 52 million people out there who are eligible home buyers that just can't afford that level of payment. So again, home buyers are getting completely priced out, especially the locals here. The people who are buying are going to be those people relocating or selling one house they have equity in and moving into another one and purchasing it cash. As you know, we are in a monster bubble. This is inflation adjusted home prices. We are way beyond the 2006, 2007, 2008 bubble. And we have this new bubble that was completely Fed induced. And it's a speculative bubble because we had so many investors drive up the prices in such a short period of time with demographic changes and migration changes. Well, migration is down 80% from the peak to Florida. We're normalizing, okay? It's not that bad. We're normalizing. There are still people relocating here, but it's slowing down. And there's some people who are relocating out. Florida is a very unique state where we do go through boom bust cycles. So it's very possible, in my opinion, we'll see Florida real estate prices come down 35% from the peak over the next 3 to 4 years, coming back to normal, which is badly needed. We need affordability here. We need the next generations to be able to invest in properties here, fix them up.
Yeah, I would agree. Affordability is critical. If the majority of the population can't participate in owning a home, you've got a big challenge for a lot of people. And there are a lot of people that may be getting frustrated with continuing to just send a rent check out and not create any sort of equity or value. So I'm really curious to see how this plays out. This is something to be tuning into tremendously as far as the speed of which baby boomers are exiting from their big homes, from the speed of which baby boomers are selling off, from the speed of which wealth is transferring, and for the interest of the next generation's desire to own homes. Is there even a desire for the next and younger generation to own a home? Do they want to be more mobile? Do they want to be more free? Do they want to be locked into one place like we were back in the industrial age where you worked one job, one location, one thing? Whereas now you can be working from anywhere, where there's far more mobility, there's far more freedom. And I think that value has changed significantly since the industrial age as we head into the information age and thereon.
And be part of the community. You act differently when you're an owner than when you're a renter, and you care more about the community, and you start thinking more long term when you're an owner versus when you're a renter, which is good. The South specifically is seeing this massive inventory spike. This part of this is that the builders thought that the demand was going to last forever, right? This heightened level of demand. The reality is the people who wanted to move here had just moved up their move, 2 to 3 years in advance. And so there's this massive purchasing period, and now it's reversing, going back to normal.
Well, gosh, if the South is seeing a bunch of new product come online, that's actually good for pricing. The more product online, the more competition for purchasing, the more pricing is going to have to come down because there's more choices for buyers to be choosing from. So if there's a huge boom coming through of single family homes and they're starting to hit the South, be aware that pricing could come down quickly in that market, or be watching it on a month-to-month basis to see if you now qualify based on this new product hitting the market, because it's going to throw off supply and demand, which is what's going to control pricing.
But here in Florida, you can see that we're already 22% above the pre-pandemic level. So we are in a position where we can continue to see inventory rise very, very rapidly. This is just the inventory for sale. This comes from the Reventure app. Great data on that platform. And I think we'll continue to see inventory continue to skyrocket and maybe double the pre-pandemic levels that we've seen. That's definitely a possibility. The only reason that wouldn't happen is because prices chase down quickly. And we think that prices, again, will come down over the next 12 to 24 months, even if the Fed somehow figures out how to reduce rates, working with Powell, which I don't believe will happen. I think we'll likely see 1 or 2 rate cuts this year, but it's not going to be 300 basis points as President Trump says. I think we are at all-time highs for most asset classes. So I don't think that there's any reason to really push mortgage rates down when only 6 states out of the entire country are really feeling this shift.
There's so much talk about interest rates coming down, and we're going to see interest rates come down. And there's always this piece in me, in this voice in me in the back of my head, when everyone thinks something is going to happen, it often goes the opposite direction. So, I think there's valid points here of, is there a critical need to lower rates? And I think that one thing that will separate that and be the deciding factor for the Fed is jobs and job losses. So the data is going to continue to come in and dictate what the Fed does. But right now, asset prices are still high, right? As soon as you start to lower rates, it's going to push asset prices even higher. So the fact that everyone is super certain that rates are coming down, I'm not so sure. And I know that's a contradictory viewpoint, but what I would be thinking of at this point is protect your downside. Always protect your downside. Let the upside take care of itself. Because if they don't lower rates and you expect them to lower rates and you get into a variable rate loan, now you could be in a tough spot, just like a lot of folks got into in 2022. Whereas if you expect rates to come down and they have to bump them in the next 24 to 36 months, now again, you're in a very tough spot. So ideally in real estate, what we're focused on is base hits. How can you put yourself in a great asset, great location, great value add strategy, excellent property management, and then ride it for 5, 7, 10 years. If the market cooperates, fantastic. Can we refinance, ratchet lower into a lower fixed rate loan? Or are we in a position where we're in a hold and cash flow scenario, enjoying the subtle appreciation that's going to happen as they continue to print currency like they've done since 1971?
In housing in Florida is one of the worst. Texas is the worst, and then Florida is right behind it. And then we see some other areas like Arizona, South Carolina, North Carolina, Colorado, and areas of California. So Florida's rough. This is where the baby boomers' wealth is. This is where it's crazy. So you can see, if 5 spots here are where the wealth is, and prices are coming down, then boomers' wealth is basically evaporating very quickly. Thankfully, the stock market is keeping up. If we saw real estate prices come down and the stock market come down, I think the boomers would be freaking out a lot more than they are right now. But they are freaking out about their house values, and they are listing it for 6 months, not getting any bites because they're unrealistic on the price, and then they're taking their property off of the market. So the question is, who will buy these houses long term? This is something that we think about a lot, is who's going to be that next buyer for the 3,000 to 3,500 square foot home. Maybe it's somebody who gets an inheritance, but will inheritance really change much of what's going on? When you think about people who win the lottery, they end up just spending it all the way that they had before. That's their habit. I don't think that just inheriting wealth will mean that they'll keep it. Most people just buy the car, buy the house, buy etc.
Yeah, if I'm in a position where my kids are going to be receiving a large amount of wealth, you have got to educate those children on what to do with it. Nothing can ruin a child or a human being faster than a whole pile of money when they don't know what to do with it. So if I'm in a position of massive wealth, and as we continue to train our children on what to do with the money, there's the only way they will qualify to have the wealth transfer is by becoming a unique person and understanding what to do with it. Otherwise, it will ruin them. It would actually be extremely irresponsible for me as an adult, for me as a parent, as a dad, to allow my children to have control of a large amount of wealth when they don't know what to do with it. And I've seen it time and time again. We see it in the snowboarding industry. We see it with people who win the lottery. You see it with families who don't teach their kids how to handle the wealth. 3-5 years later, things have fallen apart, and it's really painful and really hard to watch. And a lot of tragedy and breakup happens because of money. And so I think learning about it, talking about it, getting clear on a business plan, making sure your children qualify and have a really clear game plan on how to help take that wealth and create it and make it grow. That's a superpower that needs to be spent time with.
But that doesn't mean they're going to buy the house in the same area that the property was sold. So if the property is sold in Florida and then they move to some other state, then the wealth transfer is actually moving out of Florida, and then we have a vacancy. So I think the most likely situation, just like most heirs, they'll spend all their money into consumerism. The banks will get control of all that money back. They'll sell more of this stuff, and it's going to be unfortunate.
A point he mentions here, which I think he's unfortunately spot on, is that a lot of the people are going to get this wealth and spend it on consumerism. Again, the real simple play is, if you acquire this wealth and you have a big fall of liquidity, take the time and get it sprinkled into different assets in different parts of the country that are bulletproof, that can start to pay you streams of income. Because once you do that, now you're living off the passive income, and your nest egg, call it the goose that's producing these eggs, the goose is still yours. You still own it. The money, 10, 15, 20 million, is still yours, and it's producing the egg. It's producing the cash flow. And if you could take that one step and understand that that is the play, now you've just sidestepped losing all of it. Because just think about your parents who spent the last 20, 30, 40, 50 years of their life accumulating this massive amount of wealth, and you just squander it within the first 2 or 3 years. What a catastrophe. You could build that, live off it, enjoy a beautiful stream of income your entire life, make it grow, and then transfer it onto your kids and continue that game for decades and generations to come.
But that's just how the case is. And then will money flow out of Florida's larger houses? I think so. I think there was only a certain number of people who will relocate here that'll have the wealth to be able to purchase these larger houses. And they do like the larger houses. The problem is that the boomers will be passing away faster than people will move here and move into those larger houses. So that's my prediction. And I appreciate you watching. What do you think? Do you think that this silver tsunami is going to absolutely decimate the Florida housing market? I think it will long term. I'm bullish on properties that are in good neighborhoods that are 1,200 to 2,000 square feet, but these larger houses I'm no longer bullish on. I think that the demand and the affordability issues are just not going to make that.
Yeah, I think it's a valid point worth looking into. Supply and demand controls pricing. So if you've got a bunch of boomers that have huge homes that are coming to the market, where's the buyer's pool? How big is that buyer pool? And if that is coming, is it wise to get ahead of it? Take what you can now before it continues to compound, because the big selling, he said here, based on the data, is 2026 to 2036. Homes that are sold earlier, sooner, may produce a higher return on that equity. And that equity, until you have it in your hands, it's just numbers on paper. Net worth, what you're worth, is just numbers on paper. Cash flow is real, something you can spend now. Equity, it's just a number to say, hey, look how much I'm worth. Really? Are you worth that? You don't know until you sell, until you get the money in your pocket. Good luck.